Hey guys, it's Silverback. Hope you're doing well. Welcome to another video. I just wanted to just run through a bit of an update on. I've recently been obviously I'm doing Heikin Ashi candles and trading the top 30 cryptos. If you are new to the channel, that's basically what I'm covering, and just showing you where markets can go and how to sort of stay on the right side of things, and also easily check exactly where you stand on multiple assets, so you can basically go through and cover off just like once every. At the moment, I started off at one day. To give you a bit of the background of the history, I started off doing this as a monthly trade, and there's some aspects to that monthly trading that more like a spot investment trading for cryptos. Now that's well and good. It's all well and good if you've got a very large portfolio and you can make some huge amounts of money. If you look at Silverbacked on Coinmonks A.I on I was a contributing writer there on Medium over the last 12 months. You can sort of see, 30 grand a week, and crazy amounts of profit when markets are pumping. In monthly charts. That's all well and good, but for the people that are trying to use this sort of like trading method and Heikin Ashi candles in the smaller time frames, they are a better tool for longer time frames. But because you do get stopped out, you'll get stopped out quite a lot on it. Like if I started out doing this, on and this channel and series of videos on YouTube. Doing daily, and then essentially I used actually XRP was a good example. If you jumped in, let's say I'll just grab an entry point. Let's say a green candle here, which is how you use these Heikin Ashi candles. What you're basically looking at when you got a full body candle, and it's got a wick up the top. That basically is pointing up. So it's essentially saying there's no hesitation, and the price probably will likely continue up. Now it did get smashed out. Smashed down straight after that candle, so this is not the best example. But when you see this bottom wick down here on a green body, is basically where if you're in your trade already, you can basically put up a stop loss just below it. So you're just a little bit below the volatility in case it does get smashed down, and sure enough, it did. Right. But what I did, I covered this in the last video, so I won't harp on it too much. But as you increase your time frame, you're finding that you're trading less, you're getting in and out less. So you're going up, you're going down, you're going up, you're going down. So basically, at a three day, if I was going to do this, I would have jumped in here. So that would have been my entry. I would have looked up. I would have kept my stop loss down here. This is a key part of it, right? You want to keep your stop loss away to allow the price to run and not get stopped out too easily. And this is what was happening on the 1 day candle, 1 day chart. So in here, you would have seen a wick on this one forming here, and you would have brought your stop loss up to there, right? And then you would have got a beautiful buy candle up there. So you would have left your stop loss there, and you would have got smashed out there. So your profit would have been from here to sort of here. So what is that? That's 17% in 21 days. There you go. Now what I've done is gone for 4 day. Now I made this decision before this red candle had pointed out, but I did see this volatility here. So essentially this candle here, and this candle just closed, and this candle just started 18 minutes ago. So just keep this in mind. This is a 4 day chart, so we've got 4 days to go here, and we just started a new 4 day period. So these are 4 day candles each. So the way the principle that I use goes is essentially I got in down here. I would have had my stop loss there in case it goes immediately against me, and then I would have followed it up, and then that one just closed. So basically, what I would do is put my stop loss just below, just a little bit below this area here. So if it continues to being just as volatile, or it ends up coming down lower, it'll still get me out at 53 cents. As you can see down here in the orange. But what I'm allowing it to do over the next 4 days, the next 4 days candle has got to go. The next 4 days, let's see how that develops. If it ends up going sideways and up, we won. We won from there to there. There's profits that we can't get taken away from us because it'll get stopped out. But also we're allowing it to breathe. We're allowing it to move around a little bit without getting knocked out. There's a lot of money in the leverage markets. Where a lot of people will get long after all this sort of like price action like this. They all get long, and then what happens is a big surprise. I'll show you this. So that's a perfect green candle, right? And then it was immediate, and that would actually every bit of momentum, all the momentum oscillators that all these leverage traders are using, or just traders in general, EMA crosses, MACDs, all these different indicators that a lot of traders use. It all would have turned green, like let's go, we're bullish, and then it got smashed down immediately, right? So this is people that are wanting people to get long, and they smash the price down, and they buy in cheaper, and then they run it up again. They smash it down, and then they run it up. You see that? Smashed it down, run it up, smashed it down. Are they going to run it up? Who knows? But if you don't get knocked out when they smash it down, you're going to be able to get into some longer term trades. So this is what I want to do. So, again, if you've been following me for a while, you would have known that I got past 1,000% returns on Solana, and I never got knocked out on a monthly chart. So I'm trying to sort of emulate that a little bit more. The daily is a little bit too sensitive, and I'm happy to. I'm doing 4-day charts now. I'm happy to go even. I'm happy to settle back up to monthly, But I want to try and take advantage of some of these moves, and stay in the smaller time frames for people that have got smaller accounts. So this is, again, I'm just showing you the principles. You do it yourself. And this is exactly how you do it. But anyway, I'm going to show you through the where I'm sitting in the current the top 30, or at least the ones I've sold. I'm looking at the second last candle here, because this candle is only 21 minutes old. These are 4-day period candles, so each one of these is 4 days. So as I go through this list, I'm looking at the second last candle. If that's red, I'm not touching it. All right, so I'm staying in the column. So Floki. These are all in the red. NIA protocol, DOT, FTM. You can pause this if you wanted to see exactly what's going on. AVAX, VeChain, Matic. You can see it. It's very clearly. It's a clear way to trade. SHIB, AXS, Atom, Cosmos, BSW, Uni, EOS, Link, Ethereum. Ton, Litecoin, Doge, Filecoin, TRX,